Joining us back on Wall Street Silver is Keith Neumeyer. Keith is the CEO and founder of First Majestic Silver. Keith, how are you doing today, sir?
Great, guys, and great to be back on your channel.
Awesome. Well, we appreciate you for taking the time to speaking to Wall Street Silver community. Keith, give it to me straight. Are you pissed off silver is not at $40?
Gold attempted to break through 1900 a couple of times over the last few months, and silver, made some quite good attempts to get through 28 on I think 3 or 4 separate occasions, and it was just like this invisible hand was there that would just wouldn't let these metals move. Right, I'm watching this market, and I've been in markets for 35 years, and I actually worked on the floor of the stock exchange for 6 years. So I grew up being a trader for the banks, and maybe some people don't know that, but so I think I have a pretty good instinct on what markets should and shouldn't be doing, right? And it was just acting so unnaturally that it was I ended up making a relatively good move, on First Majestic's point. I didn't like the activity, so I ended up selling about 1 million ounces of silver at $28, just because I have to protect the business, of course. So not that I like to admit we sell metal, but we do. We're producing metal. we do have to sell metal, and my job as the CEO of First Majestic is to create as much value as possible. So I didn't like the action, and I took that opportunity, and it ended up being the right opportunity. I hated doing it, but I just was compelled to do it. And now look at today. It's almost like the words that are coming out of the Fed are written by the banks. That's the kind of collusion that I think that we are experiencing, and it's pretty shocking.
So let's talk about the overall crazy economy. What do you think about the latest moves from the central banks? They're all talking transitory inflation or not. I mean, are you on the transitory bandwagon, or are you more, we're headed for something much serious, 70s style, long term?
I think that nothing goes straight up. So I don't think we're going to see 10% CPI anytime in the next couple of quarters. I do think we will get there, but it's not going to happen that quickly. I think we could see a dip. We saw it all comes down to comparables, right? And it's all a state of change. So the comps will start to be a little bit worse as we get through this year, because the inflation started really at the end of 2020. We're comparing against comps that were in Q1, Q2 of 2020, which were quite low. So some of these numbers are skewed. It's almost like you have to ignore 2020, and if you go back to 2019 and look at the comps from 2021 to 2019, the inflation rates are actually much lower than are being currently reported. So I think we will take a little bit of a dip here over the next couple of quarters, but I think there's a real supply issue problem, and I think there's also a supply chain problem. We have governments now not wanting to trade with each other. We have governments trying to push production within their own borders. We also have miners, just beginning to make a profit in the last couple of maybe since 2019, call it, and it hasn't been long enough for them to really make the necessary investments to build out the mines to produce the metals. So we have this dropping supply of silver, dropping supply of gold, dropping supply of copper. These are critical metals that we need for the human race. So we now have this extra demand that's coming in. So I think there's a perfect storm, but I do think that we're just going to have a bit of a dip here before inflation really takes off.
You recently ventured into gold. Is there a reason why? Do you think that there's more potential for gains in gold?
Actually, no, I don't. I think there's more gains potential in silver, and I think I'm quite clear about that. But there's nothing wrong with having a little bit of gold. Gold tends to be a little less volatile. And I can tell you, quite clearly as the CEO of a silver mining company, which does produce gold, I can tell you March, April, May of 2020, if we didn't have gold coming out of our mines, First Majestic wouldn't have come out of that, depression or whatever you want to call it, as well as we did, because, silver dropped very, very, badly, as you know. Fortunately, I was able to go into the futures market and buy some silver. I bought 1 million ounces in the futures market at, I think, around $15 or something we paid for it. And also I suspended all our sales. We stopped. So we ended up stockpiling about 1.1 million ounces of silver in Q2 of 2020. Both of those moves were quite good. We made quite a lot of money. I think we made $5 or $6 million on that futures trade, and we made another equal amount of money by hoarding those ounces. But we didn't have to do that with gold because gold's just not as volatile. Yes. So my point is, we're still about 55% silver revenue and 45% gold. But I looked at the move into the United States, into Nevada, is slightly different. Sure, would I have picked a silver mine over a gold mine? Yeah, I probably would. But finding a good silver mine is not the easiest thing to do. Silver is a lot rarer than people think it is. We're only mining 8 to 1. Todd Anthony, my VP Corporate Development, showed me a chart the other day that actually suggests that we're only mining 6 to 1. I've got to confirm that, but I'll stick with the 8 to 1 ratio for now until I get told otherwise. But that's a pretty shocking stat, so we were looking at political risk, and we've been in Mexico for 19 years, and we know Mexico quite well. I love Mexico, but it has been getting more difficult, more challenging for the foreign, companies acting within that country, because just the politics there are getting a little bit on the crazy side. And we've figured, what's the best place to go, and we chose Nevada, and opportunity came up, and Eric Sprott's a good friend and a long time business associate, and we did a deal on an asset called Jerritt Canyon, and we now own it. It's our first gold mine in the United States. So it's the first mine in the United States, and it is actually 100% gold.
Do you have any immediate future other corporate development ventures that you're looking at, or maybe in the next year or two?
Well, Lee, even if I
yeah, he's gonna spill that to you, Lee, right now. Hey, what's the next mine you're gonna
just
buy?
Say yes or no. I mean,
what's the next junior exploration project you're gonna buy, Keith, 6 months from now, so I can buy it now? Can you spill that for us?
I mean, are you active in the markets, what I'm asking, or are you just kind of going to settle with what you have and grow it? Or
well, on a corporate or personal level, I'm not sure where you're going with this question, but on a corporate level, First Majestic just bought some BlackRock Silver, which is a Nevada-based silver exploration company, which we're looking at. It wasn't a huge position, but we put, I think, about $1.25 million into it, I believe. I also put some of my own personal money into it, and as well, and so it's a decent shot, but it is exploration. It's the riskiest end of the curve, and there's a limit. I don't think First Majestic should be peppering juniors with a bunch of money so we could end up owning 10% of 20 juniors. I just don't think that's a good strategy. So I'd rather be a little bit more strategic than that. But in this particular case, we decided to pull the trigger. When it comes to me personally, this move down has been pretty interesting to me, because I had some lowball bids in some of my favorite stocks, like Nevada King, Snowline Gold. I think those are the two that really come to mind. A couple outside of the resource sector, Pond Technologies, one I really like. But I got these bids filled, which was pretty surprising to me. So I'm a happy buyer when people decide to panic sell.
A lot of people in our community, they really love those cubes from First Majestic. Last time I checked, they were out of stock. Are they restocked now, Keith?
I think we did get the last shipment.
Cool.
But we're being told Sunshine produces those for us.
Oh, cool.
They're a very difficult product to produce. It's all hand done, and they actually, it's done with pellets, and they have to weigh 10 grams of pellets out, and they put them by hand into this tray of these, you know, 1 or 10 gram cube trays, and they melt it into these cubes, and they have to hand stamp them. They hate doing it. They charge us a fair amount of money for it, but I love them, quite frankly.
Yeah.
You know, they've told us that due to their you know, internal issues, you know, because they're having a hard time getting rounds to the U.S. Mint, and that's one of their biggest clients is the U.S. Mint. So and they take priority over First Majestic. They've told us they can't produce anymore until at least September. So if we do have any in stock, if we do have any in stock, we won't be getting any for quite some time.
Yeah, no, I saw that someone posted a picture on Reddit, and I tweeted it out, and I tagged you, and you retweeted it. But this beautiful picture of someone holding some First Majestic rounds and those cubes, you know, your little toy, and it was just I'm going to go buy some myself.
So
it's actually absolutely insane that the mints are in this situation and the price of silver is where it is. I mean, obviously there's huge demand for silver and the price just is not responding as it should.
Yeah, it's pissing a lot of people off on Reddit. It's pissing people off on Twitter. I can see it. People are just sort of
can we blame you, Keith, for selling it
Keith,
top there at 20?
It's all your fault. You're selling too much damn silver. You need to stop immediately.
Yeah, I know. Well, you know, I've said to many of the mining companies, or silver mining companies, hey, let's pick a month, and June is the best month because June is always your low. You know, if you go back 30 years, and I tweeted out a chart, I guess a couple of years ago now, we can probably find it somewhere, where you show, you know, silver prices and gold prices always hit a low in June. Now, of course, it's not 100% accurate, but you know, this June obviously looks like it is that exact case.
Yeah, well, you have a background in trading, so you're very familiar with the paper market. What are your thoughts on what's going on there? I mean, are they really controlling the price now?
Well, look, we just came into the June 30th expiry, or June 30th and a quarter is a pretty important month because we're halfway through the year. So and so it's a big contract that rolled over last week. The deliveries are today. So the last delivery date is today. So you know, I would suspect that, you know, coming July 1st, you know, I know we're going into a Canadian holiday as well as an American holiday, but nevertheless, well, you know, once we get through this, probably next week or so, I would expect to see both silver and gold start to move a little bit higher. You know, how quickly they move, I don't know. You know, I don't have a crystal ball, but I would expect that you know, August numbers and right through the end of the year, you know, we'll be seeing much higher metal prices, and it just, you know, yeah, the paper market absolutely drives these prices, and the banks absolutely have control over these prices, and but they're into making money for themselves, and you know, you try to be on the right side of that trade, and you know, that's why, you know, I time First Majestic sales because we have to sell metal, we have to sell gold and silver. That's our business. So I try to do my best to time our sales around what my perception is, what is happening in the marketplace.
Are you noticing any changes from the, you know, from that level of the supply chain? Are you noticing any changes from the buyers trying to secure supply directly from you? Are you seeing any of this? From what Sprott's doing, are you noticing changes in the market?
Not particularly. I've you know, the market's always been tight, and we've never had a challenge selling metal. You know, I've never, you know, unsuccessfully, you know, had a trader say, "Oh, well, we can't sell your silver today." That's just never happened. So. And in the way the system works, and then, you know, I guess there is a bit of a misunderstanding out there, but you know, we deal with the banks, and all mining companies do. So very few mining companies actually sell direct to the end consumer. There are a couple that do, but they're quite rare. In our case, we, you know, we'll phone up our trader in New York and say, hey, you know, sell 100,000 ounces of silver at, you know, $28, and they happily do it, and then they know where the doré is going. They know where that doré is going to show up at a particular refiner, and we use a couple of refineries. And we own that metal right until it gets spit out. We pay the refinery a fee for refining it into a 1,000 ounce commercial bar. And then the trader in New York has a home for that silver. So he's got a buyer on the other side. And that buyer could be Sprott. It could be Sony. It could, we don't know who that buyer is. We don't ask. And it's not something that we really care about. The trader in New York just simply says, okay, ship that bar to whatever place, and the buyer of that bar, Tesla, Apple, whomever, pays for the transportation of that metal to wherever they want it to go, and we get paid immediately at the price of $28 that we sold it at.
Well, that raises a question for me. We've interviewed Rick Rule, who's described what his trader does to acquire silver from Sprott for Sprott PSLV and their other funds. Why haven't you? I mean, Rick, you make 1,000 ounce bars. He buys 1,000 ounce bars. Why are you dealing with the bank in the middle? Why don't you just sell direct to, if he's looking for 1,000 ounce bars, why not cut out the bank middleman in that process?
Yeah, look, it's possible, but it's a whole different system, right? You would have to set up banking relationships. You'd have to set up delivery relationships. It's just simply saying, hey, you want to buy some our store. We have an obligation to our shareholders to get paid for what we're producing, and so there has to be some kind of system put in place to allow the free transfer of these metals to a party like PSLV, it could, I'm sure it could be done, but it's going to take the banks and the lawyers to figure out how to do it, and it's quite complicated.
Gotcha.
There's already a system in place.
Okay.
That all the miners use. That doesn't cost us anything.
Keith, I have a question for you about Basel III. I mean, it's now kind of starting to be active. A lot of people were predicting like crazy prices because of it. Doesn't seem like anything's moved at all. Do you have any thoughts on it?
I've been asked that question several times over the last couple of weeks, and I've been, I've said, and I'll say it today, that I don't have a clue what impact it's going to have. I don't trust governments. This document was signed quite some time ago, and it's been this clock has been ticking. And if it had some kind of major impact on these banks, they would have prepared for it, long time ago. In reading some of the stuff, it looks like it's positive. It looks like they can't use paper as a collateral instrument, and they have to use physical. And it's a lot of good things, but I just think that it was so telegraphed into the future that the banks must have prepared, for such an event. It's only
the market as a result, right?
Yeah, exactly.
For all of the apes on Wall Street Silver, what's the difference between a doré bar and a concentrate bar? For all the dumb apes.
It's not a concentrate bar. It's concentrate. So concentrate is a pile of powder, black powder. Okay, so when you have a rock, and it depends on what Mother Nature has got put in that rock. But if it's a complex metal, which which is quite common, where the ore could contain lead and zinc, copper and silver, and molybdenum and selenium and chromium, and you got this massive sulfide rock. It looks beautiful, but processing it is very difficult because there's so many metals in it that under cyanidation process, you would just go through so much cyanide to try to break those metals apart. It becomes uneconomic. So you have to use a different technology. It's called flotation, where you float out all the waste material and you're left with just the metal content. In the case of doré, it's a block of, it just looks like a big block of silver, or could be a smaller block of gold. And it's usually in the 90% range, pure gold or pure silver. In the case of a silver dory bar, it would be like, we call it 90% silver, maybe 1 or 2% gold, a little bit of lead in there, a little bit of copper, a little bit of zinc, and some other metals.
Mhm.
And it's done through a completely different process, where this rock is, it's a clean material. So this rock doesn't have a bunch of other pollutant metals in it. It's just got clean rock with primarily silver in it, or primarily gold in it. And you just throw it in a bath of cyanide, and the cyanide just leaches out all the precious metals. And you then put it through what they call a Merrill-Crowe system. It's a big press filter system, and you pull out this material. It's again a black kind of dusty material, and then you melt it in a furnace on site, and it turns into a dory bar. And it's the cost difference between a mining company that produces concentrate versus producing a dory bar. And this is pretty shocking. If you have silver con, it's going to cost you $5 an ounce to produce a single ounce of silver out of a silver con, using the standard smelting technology, shipping over to China, and so on and so forth. So that's a big cost. At $15 silver, that's why the concentrate producers were doing so poorly, is because a lot of their money was going into smelting. In the dory business, we pay 50 cents an ounce for every ounce of silver we produce in the form of a commercial silver product. So it's pretty dramatically different. And that's why I'm so happy to produce dory bars.
Nice. That's like $4.50 difference just in cost. That's huge.
Yeah, that's right.
You stated in a recent interview on a German channel that you're expecting a major stock market decline. How are you positioning yourself personally to protect yourself from that? What moves are you making?
Yeah, I struggle with that, all the time, because I look at this as I'm not sure if I said this in that interview or not, but I look at this period as very similar to 1999 to 2000 period, where we just went into this parabolic equity move where nothing was going wrong. Everyone was happy. You could raise $10 million on a business plan and not even really have a business. You just had an idea, and you could float it, and so on and so forth. And this whole SPAC market, is very reminiscent of this very similar type of hyper bubblish type of market that we experienced. And the Nasdaq hit 5,000 in February of 2000, and over the next 3 years it dropped 80%. By the way, it didn't hit 5,000 again until 2015. It took almost 15 years for it to get back up to its old high, and that what lit up the entire resource sector, because there was, I guess, a very similar phenomenon. Everyone just wanted to buy real assets. Their money went into real estate. We of course got into a real estate bubble. The money went into resources, and we got into a resource bubble, but it took 10 years. But copper went from 60 cents to $4. Gold went from 250 to 1900. Silver went from 5 to 50, and it lasted for 10 years. And I think that's exactly the same type of thing we're going to see. Yes, I expect everything to go down first.
Are there any positions like I saw that you're doing First Gold now is a new one that you're putting together? How did that one happen? It was sort of a similar thing. You put a bunch of pieces together into this new gold company that you're behind.
Yeah, well, Jim, thanks for bringing that up. I think I've proven in my career that I'm a pretty good buyer. I may not be the best seller in the world, but I put First Majestic together right at the bottom of the market. I arrived in Mexico with a paycheck, or not a paycheck, a checkbook. And I had people, technical people, of course, advising me, and so on. And then we ended up buying, pretty interesting portfolio of silver assets over a period of 4 years, and then turned First Majestic into what it is today. When 2014 comes along, and I'm looking at this market, First Majestic stock is at extreme lows. The entire sector is at extreme lows. So I put together a team of people and said, look, I think it's time to put a gold company together. And so we started analyzing the space and looked at well over 100 companies. And we created a list of 60 companies, and then we broke it down to top 10 companies. And I started approaching management teams, and we ended up buying 6 of our top 10 targets, which was pretty good. And over a space of about 15 months, from April 2015 to summer of 2016, we bought 8 companies, 6 of which were in our top 10. We had like 11 million ounces of gold total, and we were buying gold for less than $10 an ounce.
Wow.
And we bought some of the best gold projects in Canada to spread throughout Ontario, Quebec, and Newfoundland. And my commitment, we called it First Mining Finance at the time. We changed the name to First Mining Gold. I'm the chairman. I'm not involved in day-to-day management. Just to finish this part of the discussion, one of the projects we joint ventured was a project called Goldland. And this is a project that we bought back in 2015. And it's got a couple million ounces of gold there. And the neighboring property, a property called Goliath, is owned by a company called Treasury Metals. Treasury trades like 90 cents a share, and it's got this gold Goliath project, about 1 million ounces of gold. And they've been trying to buy Goldland forever because they're joining properties, and then it makes sense that they're in one company. So we decided, okay, fine, let's sell it. And then we got a whole bunch of stock and other things as well, but we still own part of it, and we get and royalties and stuff. But the stock position we're spinning out. So, or at least a chunk of the stock position was spinning out. So all the First Mining Gold shareholders will receive this special dividend in their account on, I think, July 14th to July 15th, which is only a couple away from now. So yeah, so people, if they don't own First Mining Gold now and they consider doing it, might be something they might want to add into the portfolio. Of course, people should go do their own due diligence, go to the website, look at the PowerPoint. But to get a free share in another company, it's like basically buying, First Mining at a discount, which is kind of neat. It doesn't happen every day.
You've also mentioned in that interview, the same German interview we were talking about before, that you think big consumers of silver, whether it's Apple or whoever, could eventually own silver miners to secure their supply. Can you explain more? You're thinking of, and you think that's likely to happen?
Yeah, it's a view I've had for a few years now. It's just the mining sector is so small, in comparison to the technology sector, and I don't have the recent stats in front of me. I haven't looked at these stats for, over a year, but, just based on some of the numbers that I've looked at before, the top 50 mining companies have a market cap of something like $500 billion. And they have revenues of around $500 billion. If you look at the top 5 high-tech companies, the market cap at the time was probably lower, probably higher today. It was like $3.5 trillion. And they had revenues of around the same, $500 billion, surprisingly. So without the miners, these 5 high-tech companies simply wouldn't exist. Mm-hmm. They need these 50 mining companies to be producing zinc and copper and silver to supply them with these critical metals they need in their technologies. The Zoom call could not be done today without metal. Everything we do today cannot be done without metal. And I think they're waking up to the fact. I think, Elon Musk is probably one of the ones that are probably is more at the forefront. He's looking, running around looking at lithium, and Samsung has approached a couple of mining companies as well for direct supply. So, it is happening. I don't know ultimately whether I'm going to be right or wrong, but it just, to me, if I was, some of these executives of these monstrous trillion-dollar companies, if I could secure my supply chain, I would probably do it.
I've seen the same charts you're talking about. The demand is it's steadily increasing through the rest of this decade, and at the same time, the supply graph from the mines is steadily declining. And you just sort of, I think someone, whether it was SRS, Rocco, or some of these guys are expecting that industrial consumption will eat up 100% of mining supply around 2027. And there'll be nothing left for investors at that point. No coins, no rounds, no bars for us as collectors or stackers. And because the general thought is, if someone's not going to get their silver in the supply chain, it's going to be us. It's not going to be Apple. Apple's going to get their silver no matter what. And at some point in the coming years, silver could become unobtainium, as in someone's not going to get their silver who wants their silver.
Well, I think it's already happening, Jim. I think that's why you're seeing such high premiums in the retail space, because if we have a $5 premium on our silver on our website, which is actually a little bit embarrassing. It was never intended to really be a major profit center for the business. It was done more of a service to people that we want to have silver in their pocket or they're in their homes. And but we lowered our premiums to traditional premiums of $2, which is really the premium it's been for 10 years or longer. We just couldn't have any inventory. It would just be gone, and our business would be shut down. So just to be competitive, so that we can actually have some inventory to sell when people want to come to us, we have to have this enormous premium. And so you're seeing already this phenomenon happening where the silver is not coming into the retail hands because the commercials are grabbing everything they could possibly grab. You said yourself that 1,000-ounce bars are getting hard to find. And that's really the lifeblood of the whole commercial sector.
Ivan, any more questions you want to get in before we?
No, I just want to say thank you so much for coming here. We really appreciate you, Keith. Thank you so much.
Yeah, thank you, Keith.
Well, I watch your videos on a regular basis, and I love your way of interview, and I think you add a lot to the space. And keep up the good work you guys are doing, because we really need to work together to get the message out.
Thank you. We appreciate it.
Well, thank you everyone from the Wall Street Silver community. And again, Keith Neumeyer from First Majestic, thank you so much. Talk to everyone soon.